Hello, everyone, and thanks for joining us this month for Side by Side Digital. I'm your host, Rebecca Shively. Thanks so much for joining us. This month, we're talking about farm employment. Whether you've recently come back to the farm or are looking to bring on an additional employee, there are many considerations to think about. We're excited to be joined by Ensz. Ensz is a CPA who specializes in working with small businesses on accounting and tax needs. Ensz, thanks so much for joining us today. I'll go ahead and turn it over to you.
Hello, everyone. Like Rebecca said, my name is Ensz. I own an accounting business. I have offices in Beatrice and Fairbury and Lincoln, Nebraska. So I know we have people other than just Nebraska people here. Welcome to everybody. This is an issue that I find a lot of people struggle with, because we're talking about an area where compliance is absolutely vital, and it's very expensive without being in proper compliance. So we don't have a whole lot of time today, so we're going to go through some of the major points and things that maybe I don't dive into that maybe you have questions about. What the purpose of this seminar really is just to get you thinking about it and to recognize, oh, this is something that here's a question or here's something that I need to address, so that it might be a trigger when you do hire employees, or if you've got employees now and you're kind of trying to figure out how to handle farm employment. So the first thing I want to say, and we did have a question come in early, basically the difference between farm employment and what I call regular employment. There is a difference, just like in tax law. Farm businesses have some different tax rules than other businesses, and that is kind of the case with ag employment also. So let me start by saying that if you have a farming business and you're thinking about getting an employee, and you also own a different kind of business, maybe retail or something that is not ag related, you need to be aware that the rules are different. Different forms are filed, some thresholds are different. So just keep in your head, if you have a non-farm business and a farm business, and you have employees in both, the rules are different. And having said that, this may sound self-serving. I'm not trying to drum up business, but I really would advise you to for sure get some type of payroll software, or use the CPA who does your taxes, or find somebody that understands employment law, and specifically ag employment law, just to make sure that you are in complete compliance. Probably most of the issues that I run into with people with compliance is they've been doing it on their own and they really are not aware of what all they need to be doing. So let's just dive in right now and talk about who is an ag employer. So agriculture includes farming, pretty much everything that you would think of for what farming is, agriculture related, or it's incident or in conjunction with farming operations. So who is not an ag employer? Basically, I think of this as people who maybe work on ag equipment or come out and do work on your farm, but it's not incidental to the fact that maybe you have somebody that comes out and works on your tractor, or if you're in dairy that's working on some of the equipment in your milk parlor. Those would not be considered ag employers or employees, because that's not their main function. So just something to keep in mind. But I think for the most part, it's pretty self-evident what would be considered an ag employer. I do want to direct you to, when you have time on your own, the IRS gets a lot of bad press, and some of it's deserved. I know they're under the gun with a lot of stuff, but their website is amazing. If you go to irs.gov and search publications and look for publication 51, that it is pretty straightforward. You don't have to be a CPA to understand most of what's in there, and it talks about many things that's specifically related to ag employment. So I would really suggest you check that out for additional questions. So if you are a brand new, like you're just thinking right now, I'm going to start, I want to start hiring employees, there's initial thing you have to start with, and that is you have to complete an SS4. You can do that online at irs.gov because you need to obtain an EIN, which is an employer identification number. You cannot pay payroll under your Social Security number. You have to have an EIN. I would also suggest that you enroll in, it's called the EFTPS, or it's at EFTPS.gov. That's the Electronic Federal Tax Payment System. And that is where you pay your payroll taxes electronically. And I just wouldn't, I wouldn't trust the mail or writing a check. There've just been a lot of issues post-pandemic. And so paying electronically, there's just a better trail for that. You also need to apply for a state ID. And so if you're from Nebraska, you can register for that online. I'm not sure how other states work, but most states anymore allow for online registration. And this is so that you can withhold state income tax. Now, the next one is applying for a state unemployment ID number. And I've got two asterisks beside that because it's possible, and generally ag employers are not subject to pay state unemployment tax or federal unemployment tax, but there are some thresholds. So we'll talk about that in a later slide, but just be aware that generally unemployment tax is not due for an ag employer, but you need to be aware of what those thresholds are. What is required for all employers, whether you're agriculture or not, is you do need to report all your new employees to your state's new hire division. And it differs for each state, but I'm pretty sure that all states do require it, and it's how they follow up with employees who owe child support. And that has to be, you have to register those employees within 20 days of hiring. Just to get them in the system and make sure there's no back child support that's due. The last thing for an employer is to obtain workers' comp insurance. Now, I have on there not applicable for farmers, and that is true. Farming is the only industry that does not require workers' comp. If you've got employees in other than ag, you are required to have workers' comp insurance. Farmers are not required, but I would highly suggest that you make your employee or your employees aware of that if there is some type of injury, accident, heaven forbid a fatality, that they are aware that there is no workers' comp that's going to be filed because you are not required to have it. I do have some farmers that do carry it, but it is not required like it is for other non-agricultural businesses. All right, so required forms for the employee. So the first one is the Form W-4. It's a federal form. You can go to irs.gov to get that form if you need it. And I would file the state W-4 if they have one. Not all states have their own W-4. Nebraska does. It's a W-4N. If your state has one, then you should have the employee fill out both of those. The Form I-9, that is to prove or to verify citizenship. And you are required to get a copy of a Social Security card, a birth certificate, a passport, a driver's license. So look on that I-9 and it'll tell you what forms you need to have, but you do need to prove that they are authorized, that they are eligible either as a citizen or they've gone through the proper channels to be able to work in the United States. And then associated with the I-9 is something called E-Verify. That's just one website that's through the government where you can actually electronically verify with these documents that you retrieve or receive from the employee on the I-9. You can actually get an authorization that says, yes, this person is authorized to work in the United States. But it is that doing that level of verification isn't required, but it's free to sign up. And it is, I do use that for some of my employers, so it is helpful. So another question I get oftentimes is, okay, now I've hired somebody, and you probably all know, especially, well, maybe if you're here, you're done with harvest, but if you're familiar with harvest practices, generally there's a lot of overtime during the season of harvest and planting. And ag employers are exempt from paying overtime. Doesn't mean you can't pay overtime. It's just that there's no law that requires you to pay overtime. And then, as I mentioned earlier, with unemployment tax, it's a maybe. So let's kind of look at what those thresholds are. So if you pay cash wages, and the reason that I have differentiated and called out cash wages is it is possible and appropriate to pay your ag employees with commodities. That's totally allowed to do. But when you're determining whether you're going to be subject to unemployment tax, you would only look at cash wages. You would not include commodity wages that you're paying. So if you have cash wages for one or more employees in a quarter, then you now are subject to state and federal unemployment tax. So let's say you've got one employee, and I actually had this happen to one of my ag employers. For years, they had just one employee. They were never subject to unemployment. They expanded their dairy herd, and they started hiring a lot more people. All of a sudden, now they're over that threshold. And so because they had me doing it, and I'm aware of these thresholds and these compliance issues, I started, making calculations. And then I told them, okay, this quarter, you're going to be responsible to pay unemployment tax. We had to apply with, in this case, Nebraska Department of Labor to get them an ID number. They assign a rate, and so then now all of a sudden they were having to pay unemployment tax. So it's not just wages. It's also if you've employed 10 or more workers during 20 or more weeks in a year. So it doesn't necessarily have to be just that 20,000 in a quarter. So one of the thresholds is if you have more than 10 or more workers in 20 or more weeks, that's going to put you over the threshold, and you'll be responsible to pay quarterly unemployment tax. So we talked about non-cash wages, and that would be paying in commodities. Now, we haven't really talked about what the tax expense is that you're going to have to pay when you pay payroll, but these non-cash commodity wages are not going to be subject to FICA. That's basically Social Security tax, or Medicare. And also, if you're trying to figure out whether you are over the threshold for determining unemployment, you would not include commodities as part of that greater than 20,000. And you only include the fair market value of the commodity being transferred in box 1 of Form W-2. We're not going to spend any time looking at Form W-2, but that's what is issued at the end of the year, where it reports what the federal wages are, Social Security wages, Medicare wages, and then what you had withheld for federal and state income tax. When we're talking about farm employment, if you are a sole proprietor, and that means maybe you're an LLC, but it's just you, and you have not incorporated, you're not in a partnership. If you are a sole proprietor, and that would mean that you're filing a Schedule F, F as in Frank, probably all familiar with that one. You're filing a Schedule F on your 1040. This may be of benefit to you. You are allowed to hire, you can hire family employees regardless, but the benefit is if you hire your child and that child is under 18, so 17 and below, you do not have to withhold any FICA, Medicare, or include that in that threshold for federal unemployment tax. So no Social Security, which is the same as FICA, and no Medicare. So what this ends up doing is allowing you to pay your child basically tax-free. It is wages, so you still would have to issue a W-2, you'd still have to file payroll tax returns, but you would not have to withhold and pay any employee or employer FICA or Medicare tax. And so what this does is it makes it deductible to the farmer and not taxable to the child if you pay them less than about $12,000. $12,008 is the threshold for whether a person has to even file a tax return. So if you pay your child 12,800 or less and they make no other money, that's basically tax-free income, tax deductible to you, not taxable to the child. But that is only for sole proprietors. So if you're a partnership or a corporation, S Corp, an LLC that's made an election to be treated as an S Corp, this is not applicable to you. Only if you are filing a Schedule F on a 1040 would this work for you. And if you have a child who is under 21 but 18, then you would have to withhold FICA and Medicare, but they wouldn't be subject to the unemployment tax. And the same for a spouse, and the same for a parent. Again, this is just if you are a sole proprietor on filing a 1040 with a Schedule F. Let's take a look at labor laws. So all employees, if they engage in, or employers, if they engage in what's known as interstate commerce, that means that you do business across state lines. All employers are subject to the Fair Labor Standards Act. And this might be a good place for you to look. You can just Google Fair Labor Standards Act or FLSA, and there's some great information. We're going to touch on some of it here, but this will not be exhaustive in the interest of time. But there are certain rules, but some of those rules don't apply if you qualify as an ag employer. So in this case, and this is ag or not ag, minimum wage, you do have to pay federal minimum wage. You have to pay at least 7.25. But if your state that you live in has a higher minimum wage, then state law is going to trump federal law. So if your state says minimum wage is $9, you have to pay $9. If your state says $6, then you'd have to pay 7.25. I don't know any states that are that low. Generally, the state's going to be higher, but that's where you need to know what your state says, because 7.25 may or not be what you have to pay. Overtime is not required for ag employers. Again, it is required for non-ag employers, but ag employers do not have to pay overtime. You can, but you are not required to. So then we have issues with minimum age. Now, this is different if you are non-ag. The threshold is age 18. It moves down to age 16 with no restrictions, but the lowest age that you can work on a farm is age 12. If you have someone that's age 12 to 15, they can work outside of school hours as long as the job is not hazardous. And I've got an asterisk by there because we're going to look in some detail about what's considered hazardous. If you have a child that they're 12 or 13, they have to have written parental consent, or if the parents are if you're the employer and a child's parents are working for you, then they do not have to have that written consent to be age 12 or 13. Any age child can work on his or her parents' farm. So if you're the farmer, it doesn't matter how old your children are, they can work. There's no age limitation if you are the farmer and you are employing your own children. And again, I bring up, consider the state labor laws to ensure that your farm business is in compliance, because state labor laws may not be completely in line with the Fair Labor Standards Act, which is a federal act. So let's talk about what is hazardous. And I told Rebecca that I would be sharing the slides, so you will have access to these. I'm going to email her copies of these slides, so you don't have to take copious notes or anything or have to remember this. So I'm not going to go through them in real detail here, but basically anything that attaching or disconnecting from a tractor over 20 PTO horsepower, operating or working with corn picker, a combine, hay mower, harvester, any type of machinery probably is going to fall under that hazardous job. And so you would have to have the kids would have to be 16 or older to be able to do hazardous work. Operating a trencher, earth moving equipment, even power driven circular band or chainsaw. And then this was one that maybe people would not be aware of, is that working with a bull or a boar or a stud horse in breeding purposes, working with a sow that's suckling pigs or a cow with a newborn calf. I mean, they even go as specific as with the umbilical cord present. And for any of you that work with animals, you know that the mamas get pretty intense when you start messing with their babies. So those would be considered hazardous, and children under 15 would not be able to do those jobs. Skid loader and working on a ladder, scaffold. And then this one I thought was interesting. I was not aware of this until I started putting this presentation together. Obviously driving a bus. I mean, they wouldn't be able to do that anyway because they're not old enough. But this last part, riding on a tractor as a passenger or a helper, is considered hazardous. So be very aware of what is considered hazardous and how old a child can be, you know, and when they're not allowed to do those things. All right, let's move into the paycheck. And I talked a little bit about payroll taxes. Let's first start talking about federal and state income tax withholding. When the employee fills out that form W-4, that is how you're going to determine how much to withhold from their paycheck. And there are, I mean, if you're going to do it manually, there are tables that it's Circular 15 in Nebraska, and Circular, I think there are tables in Circular 51 that will tell you if they make this much for this period of time, this is how much you withhold. I do not do anything manually anymore. I have an excellent tax software that calculates that for me. So again, I would definitely consider, if you are going to do payroll on your own, that you get tax software that payroll software that is going to calculate that for you. Payroll software is also going to do this automatically, but just so you know, FICA, which is also Social Security, there is 6.2% that is responsible to be paid by the employer. So 6.2% is going to be withheld from the employee's paycheck, but then you are also, as the employer, required to match that. And that is for 2022, you have to match and withhold up to $147,000 in 2022, 147,000 of wages, and in 2023, 155,100 is the cap for Social Security wages. You also have to withhold from Medicare, and that's 1.45% for the employer and 1.45% for the employee. So overall, you are going to be remitting 15.3% in tax. 7.65% is going to be withheld from the employee's paycheck, and 7.65% is going to have to be remitted out of your pocket. So sometimes I start this seminar this way, is, can you afford an employee? Because it's not just, hey, I'm paying you $10 an hour. It is, I'm paying you $10 an hour plus another 7.65% on top of whatever your wages are. So we have to remember that just because you've withheld from the employee's paycheck, you also are going to be responsible to remit a matching amount to the IRS. So we have payroll tax returns. This is different. If you are a non-ag, if you have a non-ag business, they file a 941, which has to be filed quarterly. Ag employers file a Form 943, which is annual. So you only file this return once a year. And it's the employer's annual tax return for agriculture employees. And that is due the following year by January 31st. So you may be thinking, well, how do I pay? How do I remit these taxes? So that's what we're going to look at next. Also, sorry, forgot one. State withholding return. And again, forgive me, I'm always going to go back to Nebraska because that's where I live and that's most of the taxes that I deal with. Generally, it's quarterly that you are going to, so like in Nebraska, it is quarterly. Some states make you remit monthly. I'm not sure of any that allow annual, but again, you need to be aware of what your state requires for state withholding. So when to remit federal taxes. If you have $2,500 or less of liability, which that means the 15.3%, so that would be the employee and the employer portion of Medicare and Social Security, plus whatever federal withholding the employee has had you withhold from their paycheck. If over a whole annual period, you have withheld less than $2,500 from their wages for the entire year, then you can just remit that $2,500 with Form 943, the form I was just mentioning. When you file that annual 943, if you owe less than $2,500 in tax, you can make payment with the 943. Otherwise, you'd be required to submit payments by the 15th of the following month of the pay date. So let's say we just finished September and you know that you are going to have more than $2,500 of liability over the course of a year. You would need to submit any payroll taxes that were withheld in September by October 15th. So hopefully that makes sense. The 15th of the month following the prior month payroll. And how to remit federal payroll taxes, I did touch on that a little bit. You can remit taxes with a check and a voucher with the 943 annually. But if you are required to remit by the 15th of the month, then they require payments to be made electronically. So there are certain cases where the payment must be made electronically, where you don't have a choice. You must enroll in the electronic federal tax payment system. And then payroll taxes, when to remit state taxes. And again, generally it's quarterly by the last day of the month following the end of the quarter. If it's monthly, it's by the 15th of the month following, and it really shouldn't say pay date, following that payroll month. So it's just like I described for the federal. So September withholding, state withholding would need to be remitted by October 15th. And then how to remit state payroll taxes. Again, most states do not require, well, no, sorry, I shouldn't say most states. The states that I have worked with, they do allow you to remit a check with a voucher, but they do also allow you to e-pay online. And a lot of states really are moving that direction just because you can track it easier. You don't have to wonder, did they receive it? Did it make it in the mail? Did it make it on time? So I would highly recommend doing electronic payment. Let's talk just a little bit about deductions from pay. If you have benefits, so a Section 125 or Section 105, those would be the employee is basically asking for reimbursement for medical expenses, and those would come out of their paycheck pre-tax. Also with dependent care, if you are going to allow them to withhold pre-tax from their paycheck, those are things that you have to have plans set up by an outside third party. You cannot do that on your own per the IRS. You have to have an outside third party set up those plans. Fairly similar with health insurance. One of the questions that we got early was, am I required to pay health insurance for my employees if they're full-time? And the answer to that is no, unless you have 50 or more full-time equivalent employees. So I'll be honest, the farming operations that I deal with, this is not an issue because I don't have anybody that has more than 50 full-time employees. But if you would have more than 50 or more, you would be required by Obamacare to provide health insurance. You can also offer retirement benefits. And again, those would be deductions from pay. And that's when, with each of these items here, this is when payroll gets tricky because some is pre-tax, some is post-tax. And it calculates your withholding and your FICA and Medicare differently depending on which of these benefits you have. So if you do want to offer these benefits, and a lot of farmers are going this direction to be competitive with other non-ag businesses, I would definitely say find a trusted advisor, somebody that understands payroll to do your payroll for you, because it's very tricky. And again, you do not want to be out of compliance in how you handle these programs. There's also a possibility that you will have some employees that have to have their wages garnished because maybe they owe money, maybe they're in bankruptcy, and a trustee is requiring you to withhold or to collect child support. So that becomes another issue where that's your responsibility as the employer. So it can get kind of tricky, kind of hairy when we're dealing with collections and child support. And again, those entities, those government entities can be pretty unforgiving. If you do not withhold and you've received notification that you are supposed to withhold and you don't, they do have the right, that agency has the right to collect it in full from you as the employer, and then it would be up to you to get it from your employee. So you definitely want to be in compliance with any type of garnishment or child support order. We have a few minutes left, and I want to talk about employee versus independent contractor. This is something that I do run into quite a bit when I'm dealing with farmers. It's kind of it goes across ag and non-ag both, of wanting to treat somebody that does work for you as an independent contractor. And I'll tell you, for the most part, all workers want to be treated as employees, and all people hiring want to hire independent contractors. So there is, at its very heart, there's kind of a disconnect there. The reason that that people doing the hiring want to have independent contractors is you don't have to deal with FICA, Medicare. You don't have to do any W-4. You don't have to issue W-2s. You don't have any of that payroll tax expense. You don't have the employer share. You are just paying them an agreed upon rate for the work that they do. Now, on the flip side of that, workers want to be treated as employees because you, as the employer, are going to pay half of their Medicare, half of their Social Security, and have some of these other payroll taxes being paid. If they get treated as an independent contractor, then they basically get treated like they're an employer, and they have to pay self-employment tax, not really an employer, but they have to pay self-employment tax on everything that they make from what you would be paying them. So they're paying the full 15.3%, basically. They're paying both the employer and the employee share. It's just self-employment tax at 15.3%. So I want to give you some tools, because this is what the IRS looks like if you'd ever have, or looks at, if you'd ever have a wage audit. This is what the IRS is going to look at. The general rule is, if the payer, so that would be you as the farmer, if you have the right to control or direct only the result of the work, like you're just approving what's been done, but you're not telling them how to do it or what exactly should be done, then the worker can be classified as an independent contractor. So there are 3 different categories that determine whether you can classify somebody as an independent contractor, whether they need to be classified as a employee. And so the three categories are behavior control, financial control, and the relationship that you have with them. So we're going to look at each one of those individually. So behavioral control would be you are telling them when to do the work, where to do it, who they're doing it for, what they're supposed to be doing. You are giving them instruction. It isn't they come and go as they please. It's more than just one job. You're not saying come in and fix this barn, fix the roof on this barn, and when you're done, I'm gonna look at it. So evaluation system, how the work is performed versus the end result of the work. So if you've got somebody, they're fixing your roof, and you're in there and you've bought all the shingles, that'll get into financial control at some point. But and maybe that's not the best example, but if they are coming into work every day and you have an evaluation system and you're telling them, well, you did this wrong, or it's, yes, you completed this project to my satisfaction, you're done. That's independent contractor. If you are evaluating every step of what they're doing, that's going to look a lot more like employee employer. If you have to train them, there's no way that's independent contractor. If you have to show them what to do, they are almost 100% of the time. In fact, I can't think of a time when the state or the IRS didn't come in and say, you're training them, they're an employee. So be thinking about that as you determine, is this an independent contractor or is this an employee? Let's look at financial control. Investment, who owns the equipment? Who owns the tools? If somebody is coming to your farm and they're bringing their own tractor and they're putting the gas in the tractor, they're going to cut your silage when they determine that they should cut it. They have a risk that you could say, no, I don't want you to come. I'm going to do it myself this year. Do they have expenses that maybe aren't going to be reimbursed? These are things, these are questions that we're going to look at, that the IRS will look at and say, if there's risk, if the person has their own investment, that's probably going to look a lot like independent contractor. If their pay is guaranteed, it's like, well, you worked 8 hours and you did a horrible job, but I'm gonna go ahead and pay you for 8 hours. If that is guaranteed, then it's probably, that's going to be considered an employee. And where are their services available? If they only work for you, most likely that would be looked at as an employee-employer relationship. So like in my case, if you read my little bio at the beginning, I am the controller for a number of different people. Because I do it for a number of different people, I am treated as an independent contractor. They pay, I charge them a flat fee for the work that I do. But if they were saying, you have to be here on these days, and I'm not going to pay you if you're not here on these days, and if they're instructing me specifically, you know, what I'm supposed to do, and if I don't know how to do a bank reconciliation, or I don't know how to do payroll, and they're showing me how to do those things, then I probably need to be treated as an employee. And then the last one is the relationship. Are there benefits? If you want to offer your independent contractor like health insurance, and I actually had one of my employers ask if he could give his independent contractor health insurance. Like, nope, an independent contractor would not get any benefits. Is there a permanency? That would indicate probably that that's an employee. Are the services being provided a key activity to the business? What are they doing something that is totally, like, if what they're doing, if you can't make any money unless they're there doing it, pretty likely that's going to be an employee-employer relationship. So we are at 110, and so that kind of finishes up. I do have some slides that you'll have some the benefit of looking at after this, that just kind of talk about doing an employee manual. A lot of farmers would think that's not necessary, but there's some good pointers in there to consider. Vacation time, just being upfront with communication and how you're going to treat your employees. So that'll be on the slides. We won't cover them here. So Rebecca, I will turn it back over to you.
Yeah, great. Thanks, Janann. A lot of information here. I feel like we could probably have a week-long webinar on all this and still not hit everything. A couple questions.
Yeah, it's huge.
Couple questions that have come in. One of them, just to reiterate, yes, we will send the slides out after the webinar. So great question there. Another person asked, what are some ways to pay people who occasionally help out on the farm but don't want a 1099?
Oh, that's a tricky one. Pay them less than $600. If you pay them less than $600, you do not have to send them a 1099. And I'm not sure when that question came in. I don't know whether looking at these categories could help you kind of define a little bit about how they're, how you're paying them. On the flip side, even if you don't send them a 1099, that's still reportable income to them. Even if you're saying, well, they are an independent contractor, they don't want a 1099, even if you pay them less than $600, they still are legally required to report that income. That's just the law. Whether they do or not, I can't speak to that, but you are required by law. It does not matter whether they want one or not. Actually, the law says that if you need to send them because they've done independent contractor, you've paid them $600 or more in a calendar year, you are required to. If they refuse to give you their identifying information to send them a 1099, you are supposed to withhold 24% from their, and it's not a paycheck. It's just you writing them. Let's say my bill is $500. If they refuse to give you their identifying information, you technically are supposed to withhold 24% and remit that to the government. So there's really no way around that. Sorry.
That's all right. Good advice there. Looks like we had a couple other questions. I think you may have covered some of these already, though. The question around health insurance, it sounded like that's pretty cut and dry with that 50 employee limit.
Not required. Let me do say, I don't think I mentioned this. If you do offer health insurance, if you're under the 50 limit, but you do want to offer it as a perk, you do have to offer it to everyone. You can't, if they're full-time. Okay. So that's a whole nother situation, but just be aware that if you have 2 full-time employees, you cannot discriminate against who you offer it to. You would have to offer it to both if you offer it to one.
Really great point there. I'm just curious, is there kind of a common mistake that you see folks when they're first starting out, or kind of, if you can give a piece of advice to the audience, like definitely avoid this? Is there something that really jumps out in your mind, especially with kind of young and beginning folks that we might have on the call here?
Yeah, good question. Probably the biggest thing I see is people not holding back that, are not recognizing that payroll tax that they're going to have to remit to the government, especially if you're under that $2,500. It's like, well, I don't have to send this in for a year. If you owe $2,500 at a pop, I mean, that might kind of be painful to come up with that kind of money. And the other thing to remember is when you pay somebody, you're paying them the net. Maybe they've earned $1,000. Well, with all the taxes you're withholding, maybe you're only paying them $750. So you've got $250 in your bank account. And if you don't keep in your head, oh, that $250 is not mine. And also on top of that $250, I've got my portion of taxes that I have to send in. That is the biggest mistake, is that people aren't aware, or they're not really thinking. They just like, oh, I've paid him. And they don't realize, oh, $250 of that is not mine to use as I please. That's considered trust fund money. And the IRS, I have seen it happen. I haven't seen it. My dad, who used to be my business partner before he passed, he actually was at a business where the IRS came and closed the doors and shut the business down because they had failed to pay the employee and the employer portion of those, what we call trust fund taxes, which is FICA, Medicare, and the federal and state withholding. So be very cognizant of that. And I actually tell people, open a separate bank account and just put those payroll taxes somewhere else so that it's not even available for you to use, because it is not your money.
Awesome. Really great advice there. One more question that came in. I know a lot of people maybe inherit an accountant or a financial person, like when they're taking over mom and dad's operation, but do you have any advice for people kind of starting out on their own, what to look for or how to go about finding someone to help them with some of these issues? Like what's the best way to find someone to partner with?
That is a great question. And actually, I have a whole series on how to pick a good tax preparer and a good accountant, which I didn't tell you about, Rebecca, but we could do one of those. Just briefly, normally, I usually have, my business came into existence by word of mouth. People came to me because they felt like, someone that I was already doing things for had said, oh, my accountant did a great job. And so they came to me and I built a relationship with them. I would not suggest just going to, the yellow pages. I would talk to people in your industry. Hopefully you have even through Farm Credit or people who you can, who do what you do. Because just because, maybe people think I'm an awesome CPA, I don't know anything about trucking. I would not want to do a trucker's tax return. Even though I know a lot about small business, my expertise is not that area. So you definitely want to go with somebody that knows ag, not every CPA is created equal. So my first line of defense, or I don't know if that's the right way to say it, I would talk to people in your field. And what's awesome is because of the pandemic, so much is done remotely. I have clients in Minnesota. I have clients in Oklahoma. I have a client in Texas. I have secure links. I can do things remotely. And so even if you don't have somebody local in your area, and if you're okay with doing things online, and if you work with somebody that's got, security in place, you could do somebody that's not right in your area. If you've talked to somebody that's like, oh, my accountant's great. Oh, but they're in South Dakota. Maybe they would take you on because remote is alive and well, and security, you definitely want to make sure they've got good security in place.
Awesome. Really great advice there. And yeah, definitely to echo what Janann said, your Farm Credit team probably has some really good recommendations, a lot of great networking, and, people have really good connections. So definitely don't be afraid to reach out and ask for a referral. And we'll be back next month on November 2nd, and we hope you'll join us then. Until then, take good care, everyone, and we hope to see you back online soon.